Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we're going to be giving you guys an update on the GREE SPRT merger. Today is Tuesday. What date is today? September 14th. Wow, it's already halfway through September. That's absolutely incredible. On September 15th, we get the merger between SPRT and GREE, and it's gonna be interesting to say the least. This has been the day that we've been anticipating for months now, and it's finally happening. Today is the last supper for support.com. So it's gonna be a fun day. Support is down on the day, which sucks, but I have been warning you guys that it's not all fun and rainbows with this stock anymore. Shorts do have more leverage now, and I'm going to be presenting the bullish case and the bearish case for support.com. Gonna be as unbiased as possible, and yeah, I'm excited to get into this video. If you guys don't mind leaving that early like on the video, to highly appreciate it. It's the #1 thing you can do to help me out here on this channel. And if you haven't already, check out that link below in the description or in the pinned comment section to sign up for public.com. It's a great stock brokerage. They're doing a promotion for new users, so definitely check that out, but more on that at the end of the video today. And yeah, let's get right into the video. Alright, so I've been asked a few different questions about the merger, so I'm going to try to answer them the best as possible right here, right now, in this video. So people have been asking what exactly are going to be happening to your shares when this merger happens. What's going to happen to short sellers' shares? Are they going to be forced to cover before the merger? A lot of misinformation is being spread around this, so I'm here to clear out the FUD. And yes, so here we have a tweet from Ihor from S3 Partners. He's basically the face of S3 Partners, who has some amazing short interest data, and someone's asking him what happens to the shorted shares after SPRT merges and the ticker changes to GREE tomorrow. So he responds, the shorts, just like the longs, go through the corporate action process and get their shares changed to new shares. Now, if we look in the SEC filing, basically we can see that the exchange ratio for these shares is 0.115. So if you have 100 shares, you multiply it times 0.115, and boom, you now have 11.5 shares, but they're not going to give you that 0.5. That will be converted to cash and deposited in your brokerage account. The same thing happens for shares. If 250 shares are being shorted for a short, you just multiply that times 0.115, and you get 28.75. You'll get 28 shares, and I guess you'll either have to pay for the 0.75 share in cash, or they'll post more collateral in order to do 29 full shares. So no, this merger is not going to force shorts to cover. It's different than TRCH and MMAT. That was different because MMATF was already a publicly traded company over the counter, so there's already short interest on that stock, and the share count was completely different. So it's a completely different merger because GREE is a private company. So essentially what you have now in support is a reflection of GREE. Then the other uncertainty is what will happen with options, and options are going to stay the same. They're just going to have a new exchange ratio. So instead of using 100 shares for the contract, it's going to be 11.5. So it does get confusing, but technically not much should change based on the merger. Alright, so this video from Fintel, this guy right here is the creator of Fintel, and he's basically just doing the same thing I do. Talks about support.com's short squeeze. So it's literally the same thing I do, and I agreed with almost everything he said. So if you didn't already know, support.com is the #1 short squeeze target on Fintel. So they have the highest conviction for SPRT squeezing. So that's going to be your catalyst right here. You guys can see if we switch over to this chart, support.com is down on the day. It's down pretty bad. It's down 19%. Scary, scary stuff. And I was trying to warn that this is definitely a sell the news event. I was warning this in my Discord last night. The merger announcement was by the rumor. This is where we saw a majority of the run-up when there was a rumor. Well, now the merger is happening. People are selling the news. This typically does happen a lot. It doesn't mean short squeeze is out of the question, but one of the main things that the Fintel creator was saying in this is that if the stock price keeps going down in this bearish trend, we can clearly see a bearish trend. You're delusional if you think that there isn't a bearish trend. Every time there has been a rally, it has been met with an equal or greater sell-off. You can see this right here. There was a 20-30% rally from about $15 a share all the way back up to $27 a share, but now we're back down in that $15 range again. So it was actually from 17 to 27. But now we're back down in the $15 range. So it's met with an equal or greater sell-off, which is not something that we have been used to before. When there were sell-offs, the support would just rally back up. And it's different now. So he was basically saying that if this were to short squeeze, it would need to have more buy-side volume. It would need to start rallying back up and get into that $30 to $40 range. You can't just short squeeze a stock that is trending downwards, because shorts are profiting. Why would they cover if they are profiting and making more money? So that is exactly why I've been saying support.com, the shorts have more leverage now. There were tons of shorts that got in on this range right here. A lot of shorts got in $30, $40, like $30 $25, and they're profiting. And we'll go back to the basics for you guys right here. We're gonna do the box technique. You can see the price action where shorts could have possibly made money. Now, given that the shorts back here, they're paying this insane cost to borrow fee of over 100%, they're probably not profiting if they shorted right here still, just because they've been paying that huge cost to borrow. But anyone who's gotten in here, even shorts that got in here at $27, $28 per share, they are profiting. And we're just not seeing that buy side volume that we were used to on the run up. You guys can see there was a peak of volume on the run up, and the volume has been going down. People have been looking at different plays. People have been trying to get in early on some other plays. You can see some of the other plays in the left side of the screen that has diverted attention from support.com. Even AMC has been running recently, which has definitely diverted attention away from support.com. So yes, support.com could squeeze, but it has to reverse this trend. It has to start rallying. The sentiment needs to start picking up on support.com, or else it's just not going to happen. And then again, there's always the risk of people selling the news, and that is something I have been saying, and something that you need to be aware of, or else you're just going to be a delusional investor. It always happens. So that being said, short interest is now up to 97.69%, which is absolutely insane. 9.1 million shares are currently being shorted. Now this stock has a completely small float. Almost the entire float has now been shorted, which is absolutely insane. The average cost to borrow, 336%. So if there is a short squeeze, and let's just say this stock decides to rally 10%, 20%, and it continues going on a hot streak instead of the down streak that we've been seeing right now, then shorts are going to have insane amounts of pressure, because first of all, it's hard to short the stock. There's not many shares left to be shorted on this stock, so adding new shorts is going to be very difficult, and they're just paying that insane over 300%. It's probably lower for some shorts, but still they're paying an insane cost to borrow, so they're going to want to cover that position as soon as possible. Another thing that the Fintel creator was mentioning was all of these failure to delivers for support.com. Now, we only have data from about a month ago on failure to delivers, but something interesting that he was saying about this stock and failure to deliver is when a share is shorted, but they never delivered the share. They never actually borrowed that share, which makes it kind of suspicious, kind of proof of naked shorting in a way, and you can see the huge amounts of failure to delivers. But there's this list for the NASDAQ. It's the SHO threshold list, and this is basically a list of stocks that are still being failed to deliver. So even though we only have data from a month ago, if a stock is on this threshold list, and there's not too many that are on this list, this is less than like 20 different securities right here, that means that there are still failure to delivers going on. So it's happening with support.com still, even though we don't have that new data. And this is news to me, so you learn something new every single day. We have support.com on the list, we have BBIG on the list, we have Ethereum on the list, ATER on the list, we have any on the list. Those are the names that I am most familiar with in terms of, I guess, social sentiment, meme stocks, high short interest stock. But yeah, support is still on this list, meaning that there are still failure to delivers happening with support.com each and every single day. And yeah, this is probably why I made that video. How is this not illegal about support.com? Because people are just shorting this stock without even having the stock. And yeah. Anyways, that's about it for the video. Definitely check out my video on support.com that I released yesterday. We go on some different information. Today we're clearing the air about the merger and basically just talking about some new information that we haven't really talked about today. I don't want to just focus every video on Ortex data because that's just the same information. So we got some new stuff today. Anyways, guys, I hope you guys have enjoyed. Leave a like on the video if you haven't already. Very much appreciated. Anyways, if you wanted to see more of this content, remember, subscribe to the channel and turn on those post notifications down below. We also have to thank our sponsor, public.com. I'll do a brief summary of what public.com is. It is an app on your phone, Android or iOS, where you can trade stocks. It's like a brokerage. It's very, very similar to Robinhood in terms of its user interface, so it's very, very nice to use. And their selling point is that they don't do any payment for order flow. So Robinhood, they sell your trading data to Citadel. Citadel is Robinhood's #1 client, and they're also the #1 enemy of short squeeze plays. So if they're pretty much short on every single short squeeze play, Citadel. And that's Robinhood's #1 client. And this is all because they do payment for order flow. Public doesn't do any payment for order flow. Public relies on customers' tips alone to profit as a business, and I think it is a great, great platform for you to have your money on, unlike Robinhood or Webull. So definitely check that out if you haven't already. They're giving up to $70 in free stock just for signing up and depositing at least $1 on their platform. So you got to check it out. It's basically free money. And yeah, that's about it for that. I hope you guys have enjoyed the video today, and I hope you guys have a wonderful day. Peace.